All right, everyone, welcome. It's 1 p.m. here in Calgary. I hope everyone is doing great. Excited for this conversation. Let's call it a conversation that we're having today on taxes. Not only on taxes, but also how to get your books, your accounting books ready for tax time. Um, it's a webinar that is this webinar today is hosted both by H&R Block and Wave. Um, yes, so let's get started. I have to let you know that today's presentation is recorded. You'll receive an email early next week with a special offer that we have for you, and the email will also include the link to the recording of today's presentation. If you have any questions throughout the presentation, please, you can put them in the Q&A function that we have here in Zoom. And at the end of the session, we'll have some time to answer your questions. Could be questions either for H&R Block, for Wave. We'll be happy to answer those questions at the end. All right, so let's get started. My name is Yannick. Yes, I'm working with H&R Block, and today we also have Annika from Wave. She'll introduce herself in just a moment when we get to further in the presentation. So today's agenda, quick introduction on who's HR Block, what do we do, who's Wave. Also, if you're not familiar with Wave, we'll be talking about reports, bookkeeping in using Wave software, the receipt management, sales tax. Do you need to register? When do you need to register? How can you manage those taxes also in Wave? And then we're going to move with tax topics. So we'll be talking about home expenses, audits and assessments, deadlines, important dates to keep in mind. And we're going to conclude the presentation with a Q&A at the end. Just a quick reminder here that today's presentation offers general advice, right? It's not advice that you should apply to specific situations. We know taxes, bookkeeping also is a complex world. There's a lot of nuances. Not all situations are the same, so we have to be careful when we apply the general concepts to specific situations. So the goal of the presentation is not to replace any professional advice that would be specific to your situation or your client's situations. All right, so about us, who's H&R Block? Well, you probably heard already our name. We are not only in Canada, we are also the US. But we've been in Canada for over 60 years now. It's over 1,000 locations that we have in the country. We do taxes all year round. It's all we do. That's our expertise. We love taxes. And we do taxes year round. That's important to keep in mind. That means whenever you receive a letter, for example, from CRA, you have a question about your tax return, you can always reach out to us. We also offer what we call our free second look. That means if you have already filed your tax return and you want maybe to double check if everything has been filed correctly, you can come to us with your tax return, with your notice of assessment from CRA, and we're gonna review your tax return for free and let you know if there's any changes that need to be made on your tax return. Um, all right. So that being said, we do have a special offer for you as Wave clients. You can save up to 20% on your tax preparation fees with us at H&R Block. This offer expires in June of next year, so you can use it for your next tax return in March, probably. You'll receive all the details for this offer, as I said earlier, in the email that we'll be sending out early next week. Yes, Annika, hi. I'm gonna let you
Okay,
introduce yourself, yes, and introduce us to Wave.
awesome. All right. So, hello, everyone. As Yannick introduced, my name is Annika, and I'm here from Wave today. If you're wondering who Wave is an online software for money management solution of small businesses. It includes an accounting feature, which the accounting piece is what we'll cover today, as we focus on what to prepare in getting ready for tax season. Wave was started in Canada, in Toronto, by two owners in 2010 who were entrepreneurs themselves and were frustrated by not finding the right accounting solution for them. Everything felt complex compared to themselves as sole proprietors. And so they wanted to move from a shoebox of receipts that they took to their accountant once a year to a simple solution online that helped them have financial insights and be prepared when tax season rolled around. In June 2019, H&R Block actually purchased Wave, and so we have continued to build out the accounting feature and other small business solutions within our product. And once you come around for tax season, we'll hopefully have you all set with the reports that you need to take to your tax accountant, whether that is H&R Block or someone else that you work with. Wave is focused on the small business owner, either working on their own as a sole proprietor or with a couple of employees, in order to have a tool that they can work with without having a full accounting degree. We can do bookkeeping for both incorporated businesses and sole proprietors. On the next slide, we'll see that Wave has many features. I already mentioned that we'll be covering the accounting and bookkeeping feature today and going through the steps of what that looks like. Wave also has invoicing, payments, estimate, and deposit tools that all relate to working with your customers in order to communicate how much they owe you for the work or the products that you're providing, as well as nurturing those relationships, getting clarity on estimates, maybe needing to collect deposits if that relates to your business, and providing a payment solution for if your customers need to pay you using credit card or ACH. We also have a receipts feature, which allows you to use your phone or upload receipts to your bookkeeping transactions. And so it's all connected. And we also have a payroll feature. So across Canada, excluding Quebec, unfortunately, we have a payroll service that will help calculate your net pay to employees, calculate the taxes to withhold, your business taxes, take care of those filings with the CRA and payments to them, as well as help prepare the year-end payroll reports that you need to provide to your employees, and provide an online employee portal for your employees to see information related to their payroll. On the next slide, we'll see the other part of Wave is our professional services. So I'm here as part of Wave Advisors. Advisors is paid professional support if you're looking for something above and beyond the software itself. We provide both bookkeeping and coaching services. Bookkeeping is where we do the books for you. So if you sign up for bookkeeping services, you'll work with a bookkeeper who will take care of the bookkeeping steps on a month-to-month basis or help with a catch-up if required. In addition to doing a monthly review call to go over what your books look like, to answer any questions that you have about your financial position, and get clarity on maybe anything that was unusual in the month that you want to discuss. Accounting coaching, on the other hand, is more so for where you want to do the books yourself, but want some extra hand-holding with that. So you would meet with a coach one-on-one in order to get help taking care of doing your bookkeeping, understanding the steps, or answering specific questions that might arise. You can either do this as a one-time service, or you can return to coaching time and time again. A lot of business owners really like to just get a second set of eyes on their books prior to sending things over to their tax accountant. And today we have two offers for you, one on bookkeeping and one on coaching. With bookkeeping, if you sign up for a year, you'll get 1 month free. And with coaching, you'll get either $30 or $40 off, depending on what package you purchase. So with that, let's dive into actually one more thing about our software is you might ask, how can I get my books done? We want everyone to be able to have an option. So we do have a free starter plan. Everything that we discussed today, you'll still be able to do in order to generate the reports that you need. But there is a pro plan that has some extra features to make some of these steps easier, specifically calling out automatic bank import of transactions in order to get your business activity transactions flowing into your bookkeeping, as well as some automations around invoicing. So now with that, let's move on to reports. So I'm starting with reports because reports are what we ultimately want to give to our tax accountant. They're the high-level summaries of what happened in our business that are the starting points of seeing how your business did and what specific activity we want to dig into more. The two main reports that your accountant might ask for is going to be your profit and loss report, also known as the income statement, and your balance sheet. On the next slide, we see that our profit and loss statement takes a look at our income and expenses. This report probably feels very familiar, but I need to highlight it anyways. Our income is going to be our sales revenue coming from providing services or selling products. So what is our money coming in? Less what is our expenses? So whether that's cost of goods sold, cost of services provided, or other operating expenses, what is our total outflow of cash related to running our business? And the difference between the two, our income less our expenses, get us to our net profit. Within our reports, this is going to be our book net profit, which captures all the activity of your business as you operate it. This is going to be the starting point for your tax return, and your tax accountant will take this and make any adjustments based on tax law to adjust for what is your taxable income. On the next slide, thank you, we have our balance sheet. So the balance sheet is a less familiar, less popular report, but it is equally important as all transactions impact both our profit and loss statement and our balance sheet. Our balance sheet is a report of balances. It is a snapshot on a given day. Often for your tax filing, it will be the last day of your calendar or fiscal year. And it shows you your business balances of what the business has. That would be its assets. Examples of asset accounts include the business checking account. It could include inventory if you're selling products. It can include property, plant, and equipment that the business might own. And then other intangible things like accounts receivable, showing the balance of how much cash will be collected and in your bank account in the future for work that you've completed, and other such accounts. Assets, what the business owns. The opposite of that is liabilities. Liabilities is what the business owes. So examples of this could be if you have a credit card and whatever the rolling unpaid balance is would be an amount that the business owes. This could also capture loans or lines of credit that the business is using. It could also include things like customer deposits. So if you've collected a deposit but not yet earned that income in order to report it as income, you still need to provide the service, provide a product in order to recognize that revenue. You show it as a liability because you either owe that to your customer or owe them a refund. Other accounting type liability accounts would include your sales tax payable. So if you've collected sales tax but haven't yet remitted that to the CRA, that is an amount that you still owe from your assets, what you have. And another example could be payroll liabilities. So if your payroll period has ended before you've actually paid out the payroll, it's going to show as something that the business owes out of your liabilities. The balance sheet, also implying that it will balance, is a formula of your assets, what the business owns, less your liabilities, what the business owes, equals the net value in your company, also known as equity. Other equity adjustments that you might see or talk to your accountant about would be if you're a sole proprietor, you might pay yourself taking owner drawings out of the business. Or if you're trying to start up the business or grow the business, you might also have owner investments where you put money into the business. Another adjustment to equity, if you are incorporated, could be owner distributions or dividends where you're drawing money out of the business as well. Awesome. So high level, those are our two main reports. And how do we generate these reports is through our bookkeeping steps. So step number one is to capture all business activity. We do this by importing our transactions into our bookkeeping system, in this case, into Wave. There are multiple ways to do this. The recommended way is with a pro account to connect your bank account so that your business account transactions automatically show up in your bookkeeping. This helps bring in the date, the description, the amount, and the type of transaction. So whether it was a deposit, money coming into your business, or a withdrawal, money going out. And then it is there for you to take a look at in step number two. Another way that we can get our business transactions into Wave is by scanning receipts. So Wave has a mobile app where you can take a picture of a receipt and it's going to look for the date, the description, and the amount again in order to create that transaction in your bookkeeping. If you are using a free account, you can still get your transactions into Wave in a bulk manner rather than entering them one by one by uploading a bank statement using a CSV file or other accounting type file, which will be available for exporting from your online banking account. If you have transactions as a small business owner, this sometimes happens, that happen outside of your business bank accounts. Maybe you accidentally used a personal account for them, or you didn't have the right card on you at the time. You can also manually add transactions that are missing but need to be captured in your business activity. All right, so step number one, get all your transactions into Wave. Step number two is going to be taking a look at those transactions and identifying where the money is coming from or where it's being spent. So we call this categorizing our transactions. In the screenshot that you see on this slide, you can see that what is brought in is the date, the description, and the amount of the transaction. And it will also show you which account it happened in. So if you have multiple checking accounts or a checking, savings, and credit card, it will identify which account. And then what we need to do is identify the category. So on the bottom transaction, we have a green amount of 200. That is a deposit type transaction. And we want to categorize it to one of our income accounts if it's coming from a sale. Here we see consulting income, but you can customize your chart of accounts for what you need to report. On the top line, we have a Staples expense account transaction of $29.99 in black, showing that money is leaving our bank account. And here, for example, we could categorize this to office supplies. So transaction by transaction, you can either do this one by one or use tools like bulk categorization in order to do this in bulk. Being able to identify what the transaction relates to and where we want it summarized on our profit and loss report. All right, moving on to step number three of our bookkeeping. Step number three is to reconcile our business bank accounts. We want to do this to ensure that our reporting matches to the actual activity of our business bank accounts. A lot of people like to skip this step, but it is really important to make sure that we don't have any missing or duplicate transactions compared to our bank reports. It will help ensure that we don't under or overstate our net profit. What the step is actually pulling your bank statement. So for your checking account statement, it might follow a nice calendar month, or for your credit card, maybe you get a statement on the 7th of every month, and you're going to want to check in with that statement end date, enter what the closing balance is per the statement, and then the system is going to compare it to what you have in Wave based on the transactions that you have in Wave. Often with Bank Connection, this is very easy as it's just a double check to make sure that everything imported correctly. On the odd case where the closing balance does not match to what your statement says, then you want to compare from your statement to what you have in Wave, matching them, going one by one to find what the variance is. in order to fix it so that it does tie to what your bank accounts have. Another thing to be highlighted here is it's really important as a starting business to make sure that you're separating business and personal. So this step is most useful when you have separate checking accounts and credit cards for your business activity. You don't want to be connecting your personal accounts, even if there is the odd business transaction in there. Those can be manually brought in separate, but this would just be for your business bank accounts. Awesome. Thank you. Next slide. All right, let's take a look at receipt management. So Wave also has a feature that small businesses like to use, which is for scanning a copy of a receipt into your bookkeeping. With the mobile app, you can take a picture. It will identify the date, the vendor, and bring in the amount, and then you can categorize it like we talked about in step number 2. If you have a bank account connected, taking a picture might create a second transaction, but with Wave's Pro plan, it will look for that duplicate and merge them together. It might not be instant, but it usually searches once a day in order to merge those together. Another option to avoid those potential duplicates is to also just attach a receipt directly to the transaction that imported from your bank account. Whether you are using Wave's receipt management or saving receipts in another place, it's really good to keep digital copies of receipts because ink fades over time. So especially some of those receipts that we receive in person, the ink will get rubbed off or fade over time. So it is good to tie them to a transaction in your Wave bookkeeping, or use something like Google Drive or Dropbox where you can take a picture, have them all saved to a particular folder. All right, so let's move on to my final piece for today before we hand it over to Yannick with taxes. Let's talk about sales tax. So within Wave, you can also bookkeep for your sales tax. What we want to do around sales tax is communicate to our customers how much we're charging them for sales tax and record that sales tax on our income. So whether you are directly categorizing to an income account or using invoicing, you can add sales tax and Wave will split out the net sales to go to your profit and loss report and then record the sales tax as payable to the CRA on your balance sheet in your liability section. Most sales taxes in Canada are also recoverable, meaning that if you pay for sales tax on an expense, you can keep track of that sales tax paid and it will be offset with the sales tax collected and owing to the CRA. There's 2 different methods for this that the CRA allows, so you'll want to talk to your accountant, but you can either in detail keep track of sales tax paid or file with a simplified method, which is a percentage of your total sales. This simplified method isn't for everyone, so again, talk to your accountant. Additionally, within Wave, when we mark all transactions in our bookkeeping with sales tax, it helps generate our sales tax report, which provides the information that we need in order to file and pay sales tax with the CRA. On the next slide, I have a screenshot that shows how to create sales tax in your bookkeeping. You'll find this section under your business settings in your Wave account. It allows you to enter a sales tax name and a percentage so that when you apply sales tax to your transactions in Wave, it's helping automatically calculate what the amount of sales tax should be. You'll also want to make sure that you check the box that the sales tax is recoverable so that you are able to identify the sales tax paid on expenses to offset with your sales tax owing. On the next slide, I'm going to cover what the sales tax report looks like. There's 2 sections here. The top part is called sales and purchases. This section, you want to be taking a look at the sales tax report based on the filing period. So if you need to file sales tax quarterly, for example, here you would set it to January to March in order to take a look at that one quarter. It's going to highlight what were your sales subject to sales tax as a net sales amount, and therefore what was the sales tax that you collected. And then it will also show your sales tax that you paid on expenses, which will offset for your net tax owing. So here we have the tax collected of $16,000 less the tax paid on purchases of $29 gets you to that net amount that you would need to report, file, and pay to the CRA. The second part of our sales tax report is the payments and balances owing section of the report. It shows the rolling amount that you still owe to the CRA. So if you file quarterly, what will happen is a quarter will close and then you report and pay to the CRA. So often that starting balance is coming from the previous quarter. So for here, it might relate to Q4 of 2024, and it's probably going to clear with your payment in the following quarter. So here your starting balance clears with your payment to the government, and then any new activity will roll forward as your ending balance for when you file and pay in the next quarter. Awesome. All right, so moving on. Up next, we have taxes with Yannick.
Yes, the most exciting topic. We do have a few slides, yes, on taxes, how to get ready for tax time, because as Annika mentioned, everything we do for bookkeeping, I mean, is in part not only for taxes, but it's in part to get ready for tax time. It's to calculate the net income that you're going to use to file your tax return, right? So there's a few things we can do during the year to make sure that when arrives tax time, we are ready and our tax accountant is proud of the work we've done. That starts directly in Wave, right? So when you create your chart of accounts, the chart of account would be the list of all the accounts you're using in Wave. So when you classify your expenses, for example, we've seen with Annika, she mentioned, for example, office expenses or consulting income. So these are all accounts that are part of your chart of accounts. So when you create those accounts that you're using, we have to be careful to think to think ahead for information that we're going to need for our tax return. And this would include, you have a list here of accounts that you should create separate than any other accounts because they have a particularity, a complexity when it comes to file your tax return. You will need that specific information. So you want to have it ready ahead of time directly in your account. So that would include interest and penalties that you've paid to CRA or any other government bodies during the year, all your meals and entertainment. So at any time when you pay for restaurants, you want to keep these expenses in a separate account. And we have to be careful because sometimes we pay for meals we pay for meals when we travel, we pay for meals if we attend a conference, we pay for meal if we attend an event, for example, with clients. So all those meals, they still have to be categorized together using a separate account. Same thing for all the withdrawals that you make from your business bank account. You want also to classify those withdrawals in one single account. If it's you and your spouse, for example, that work both in the business and both are making withdrawals from the business bank account, you want to use a separate account to classify those withdrawals, so to make the difference between your withdrawal and the withdrawals of your spouse. Also, gifts to employees, we want to keep those separate, and life insurance premiums as well, as they have a specific tax treatment on the tax return. When it comes to home expenses, so that would be a good example of where you're not necessarily entering those expenses in Wave, but you're still going to need the information at the end of the year to give to your tax accountant to make sure you have the expense on your tax return. You're eligible to claim home expenses if you meet one of the two criteria that you see here on the screen. And this is very, very important because it's a mistake that we see a lot in practice. Because sometimes people would assume because they do some work at home that they can claim home expenses, right? But it's not, when you do some work, sometimes it's not enough, right? Because the criteria here, it says your home is your principal place of business. So that means it's your main place of business. Most of the time, you're working from home. So that's usually not the case if you're, for example, you're renting an office space or if you're renting a space for your business. You have a retail store, for example. Even if you do your bookkeeping at home at night on your this won't be enough, right? Because your home would not qualify as your main place of business. If you don't meet this first criteria, you can rely on the second criteria. The second one says you use the space, so the space that you're using in your home, only to earn business income, and you use it on a regular and ongoing basis to meet either clients, customers, or patients. So this second criteria usually covers, for example, health practitioners that work from home or psychologists that have an office where they receive their patients at home. So these professionals would qualify with using this second criteria. Keep in mind, so if you're self-employed, you cannot use your home expenses to create or increase a business stuff. So that means if you already have more expenses than income when you're self-employed, the expenses for using your home for your business, they will be carried forward for the next year on your tax return. What are the home expenses we can deduct? So they include the home insurance, the mortgage interest, the property taxes, electricity, water, heating, and other utilities, cleaning materials as well. But all these expenses, they have to be prorated because we're not deducting 100% of these amounts. Usually, these expenses will be prorated using the surface that you're using for the business for your business versus the whole surface of your home. So for example, if the office space you're using in your home represents 15% of the whole surface of your home, then all those expenses will be multiplied by 15% to give you the actual amount you can deduct for tax purposes. Um, so the home expenses, it's important not to enter them directly in Wave. Because, as we just said, it's not the whole amount that will be deductible for tax purposes. So you want to make sure that the amount you're entering in Wave is only the amount you're going to deduct on your tax return. And you probably won't have this amount, the exact expense you can deduct until you talk to your tax accountant, right? So that's why our suggestion is for you to keep those expenses apart and not to put them in Wave. And then at the end of the year, when you talk to your tax accountant, you can provide the information the tax accountant need to calculate the exact expense you can enter in Wave. Um, there are other expenses that you should let your tax expert calculate before making any entries in Wave. So this would include usually all expenses that need to be prorated, or expenses where there's both a business part and a personal part also in the expense. So common examples include your cell phone, your car also. So if you're using your personal car for your business. So we want our suggestion is for you to keep those expenses apart because if you put them in Wave, it usually takes longer to make the correction, right, than simply do the right thing once. Um, that being said, um, here's a question we do get a lot from clients. So if I use my home for my business, will I still be able to claim the principal residence exemption when I sell the property? So the principal resident exemption allows you to realize a capital gain, to realize a profit on the sale of your home and not to pay any tax on that profit. So of course, it represents a huge tax advantage. And the question here is, can I still claim this exemption even if I'm using my home for my business? Because sometimes with taxes, we do hear a lot of rumors or myths. So we have to we have to be careful where we take our information. So here's the truth about this. We say for a property to keep its nature of principal residence, all of the following conditions must be met. So that means if you meet all those conditions here, you can still claim the principal resident exemption when you sell your property. So the first condition, we see no depreciation expense was claimed on the property. So that means you haven't claimed any part of the cost of your home as an expense on your tax return. No structural changes were made to the property in order to earn the business income. And three, we say the use of a workspace in the property is not the main use of the property, right? So it's um, when you, so when you look at the whole use of the house, the use that you're making for your business is not the principal use. That's what we mean here. So of course, this is a question of fact. You have to look at all the facts of your situation to make that determination, but usually it will not be an issue. Audits and assessments, they do happen, right? CRA sends thousands and thousands of audit letters every year. So they will continue to happen. We should not fear them. We should not be stressed about them because it's part of our tax system. Um, and all audits now, they are I mean not all, but most audits are no longer conducted in person. So what triggers the audit is a letter that you receive in the mail. And then this letter will ask you for additional information. Sometimes the letter will ask for specific information. So they will ask for supporting documents for a specific line on your tax return, or sometimes they will audit the whole schedule. So they will audit the whole business, or they will audit the whole tax return, or they will audit simply a specific tax credit. So you have to look at the letter to know what is being audited and what information you need to submit to CRA. So usually, as long as you have all the paperwork to back up your claims, you should have nothing to worry about because, when we send the tax returns to CRA, most of the returns now these days are sent electronically. And when the returns are sent to CRA, they're not sent with the supporting documents. Right. So, for example, your medical receipts or your gas receipts that you have, they're not sent to CRA, although you've given those receipts to your tax accountant, because the tax accountant will use those receipts to calculate the amount you can claim on your tax return. But then they're not sent to CRA. So that's why CRA is coming back to you and asking for those supporting documents in order to validate the claim you've made on your tax return. Usually on this audit letter that you receive from CRA, you have 30 days to provide the required information. If you're not able to meet that delay, you can contact the auditor to arrange an extension. And it's very important that you do so because if you contact the auditor, they will grant you an extension and they will not be closing your file because closing your file would mean to deny you the claim you've made on your tax return. So that could represent additional tax you need to pay. Um, Deadlines now. So there's a few deadlines when it comes to taxes. Those deadlines differ if you're self-employed or if you are incorporated. So filing your tax return, if you're self-employed, you have until mid-June of every year to file your tax return. It's also true for your spouse, even if your spouse is not self-employed. Although you have until June to file your tax return, you have until the end of April to pay any taxes you owe to CRA. So why why would the deadline to pay come before the deadline to file? That's because CRA expects you to pay tax installments during the year. So tax installments would be paying your taxes in advance to CRA. So when it comes a time to file your tax return, you have already paid all the taxes you owed to CRA. GST and HST returns, they also have different deadlines depending on your filing period. So you have to make sure that you're considering the correct deadline here. And talking about tax installments, so if they are required when you're self-employed, they must be paid 4 times a year. So that's in March, June, September, and December. Usually, but not all the time, but usually you would receive a letter from CRA with a pay slip, right, that you can use to pay your tax installments. It's not because you're not receiving those pay slips from CRA that you're exempted on paying tax installments, right? Usually, you need to pay tax installments when the amount you owe to CRA reaches a certain threshold, so that your tax accountant will let you know if you need to pay tax installment for the coming year. And of course, meeting those deadlines, meeting those dates, it's in order to avoid penalties and interest. Those penalties and interest these days are very high with CRA, right? Because all interest rates have increased in in the last few years. We've seen that. So it's true also when it comes to late payments and late filing penalties with CRA. So they could represent significant amounts. So we do encourage you to file your taxes on time. Even if you're not, for example, let's say you know you're going to owe taxes to CRA and you know you don't have the money right now to make the whole payment to CRA. If you make a partial payment, well, at least the interest and penalties will only be calculated on the outstanding balance you have with CRA. So you can save on interest and penalties there. And also simply by filing your tax return, even if you don't pay the amount you owe right away, if you file your tax return in time, you'll avoid all the late filing penalties. Um, I believe that covers all the topics we had for you today. I hope everyone enjoyed the presentation. We do have a few questions here in the chat, I see. And I believe those questions will help probably other members of the audience. We can start maybe with a question we have here from Sue. Sue, you say, can you recommend, and I think, Annika, that's a question for you. Sue says, can you recommend a way to lock the books for 2025?
Yes, within Wave, there currently isn't a way to lock the books for a period of time, though we have heard that request and are looking into it and building it out. So hopefully that is one of the new features that we see in the near future. One recommendation that I would have around making sure that you don't touch previous year books is when you are working on transactions in the transactions page, you can filter transactions by a time period, and there is a shortcut for years. So when I only want to work on 2025 and I've filed everything for 2024 and before, I'll select that I'm only looking at 2025 transactions. You can also filter for just not reviewed transactions, which helps you focus on just the transactions that you still need to take a look at. So in that way, you're kind of making sure that if you are making any bulk changes, you're not changing transactions that you've already marked as reviewed or on years past.
Great. Another question here from Fausto. Fausto says, do you offer any kind of integration from Wave to H&R Block for the annual T2 corporation income tax return in Canada? I guess I can answer this one. So when you're using Wave, you can give access to a third party user to get access to your books. So that's what you'll do with your HR Block tax expert. So you'll give your HR Block tax expert an access to your books in Wave, so your expert can go and get the information they need to file your tax return. And the advantage, I guess, of using H&R Block here is that when you do so, when you give a third party access like this, you don't need to pay for the pro plan in Wave, as if you're giving a third party access to anyone else that is not a Wave user, an H&R Block, user, you'll have to upgrade to the pro plan.
Thanks, Yannick. And on that,
Yeah.
in order to look for adding a collaborator to your business account, in the top right-hand corner where your business name is, you can click on the business name, and then you'll find business settings. And under that is where you can add collaborators, including your tax accountant at H&R Block.
Another question for you here. And Jason says, I have been using Wave for a couple of years for payroll. It's also linked to my bank accounts, but I've never reconciled the accounts. What is the best way to retroactively reconcile the accounts?
Great question. And we get this a lot in coaching, actually, where people have been using Wave, but maybe not fully, and they want help getting started again. But there is information in video and on our help center about entering a starting balance adjustment. So you either have the option of going back as far back as the bank connection has been connected. Maybe that's the start of your business account, and checking in with statements. You can either go month by month, or if the transactions haven't been altered that much, you could just check in periodically, like once a quarter or at the end of the year. If you only care about starting your bookkeeping going forward, so maybe 2024 and past is already taken care of, but you do want to use Wave for your bookkeeping solution for 2025 onwards or 2026 onwards. If the balance doesn't tie coming into the year that you care about, you can enter a starting balance adjustment to force the balance to be what you want to start for the period going forward. So everything does tie when you do want to see proper reports within Wave.
Great. Um, Lots of bookkeeping question. I have another one for you. Catherine says, I currently use Wave for payroll and Sage for accounting, but possibly looking to merge completely to Wave for everything. What is the best way to do this? And are there any risk of some data not merging over?
Absolutely. I can address this one as well. So when you're switching accounting softwares, what you want to do is pick a specific point in time. And often that easiest thing is to match your calendar or fiscal reporting year. And you'll bring over your balance sheet. So you want anything that's on your balance sheet, those balances to roll forward. For example, if you have $1,000 in cash in your business checking account on December 31st of 2024, and you want to start using Wave in 2025, you need those balances to roll forward. And then all the detailed activity of your business will be in Wave going forward from there. But you'll want to export everything that you want for past years out of your other system. If you do want a comparative year, rather than getting all the transactions into Wave for your previous year, you can import the full trial balance so that you'll at least have comparative income year over year or expenses year over year. But it will just be the total. So your trial balance can be imported either with a journal entry, or there is a Google Sheets add-in called Wave Connect, which allows you to enter a full journal entry, which could be your full trial balance, into Google Sheets. It will verify that everything balances, and then you can import it for that starting point when you want to start doing your bookkeeping in Wave.
Great. Another question here, and that's a very important question because there's a big risk here of mistake. The question says, for a self-employed person, how do you recommend dealing with expenses on personal credit cards? Should we process them as a reimbursement or track the personal card as an extra account? So please, 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 never, ever, ever. And Annika has said it. I'm going to say it as well. Never, never connect your personal card or your personal account to your Wave business account, right? Because then you're gonna what's the word here? What you're gonna mess up? Yes. I think that's the right word. Yes, you're gonna mess up your balance sheet because the money you have in your personal account or the money or the debt that you have on your credit card, on your personal credit card, that's a personal debt, right? It's not a debt that your business has. So it should not be on the balance sheet. It should not be in your Wave account whatsoever. So the correct way to do this is to do a manual journal entry in Wave where you're going to enter the expenses that you've paid personally during the year. You don't have to do it month by month. For example, you can wait to at the end of the year. If you've paid for your cell phone personally, for example, you want to enter this in your expenses so you can take the 12 months that you've paid for your cell phone at the end of the year and make one entry for this expense.
Absolutely. Bookkeeping just becomes harder if you do have a mix of business and personal transactions. If it is a personal credit card, but you only use it for business purposes, that might be a case where you want to connect it because it is going to help you get all of those business transactions. But if you have more personal transactions than business transactions, you're definitely doing yourself harm by connecting it because you're going to have all of those personal transactions in your business bookkeeping, which makes it harder for you and your accountant.
Another question for you, Annika, here, and this one comes from Vivek. Vivek says we use Duca Credit Union, so DUCA Credit Union, and Wade does not have the functionality to connect the business account from Duca. When this can be launched, please?
Oh, a favorite question. So, Wave actually uses a third party called Plaid for our bank connections, and they help facilitate the connection of what information to bring in, as well as making sure that it's secure and working with each individual financial institution on that. And so it's not totally in our hands, but one thing that you could do is contact your credit union and ask them if they could work with Plaid in order to be a financial institution that's listed in their portfolio.
Correct. I'm answering also a few questions directly in the Q&A there. Um, Another question from Thiron. Thiron says, can you import corporate brokerage account statements in Wave using a CSV file?
So with any CSV file, you always want to review what the format is. For importing into Wave, what they will need is one column with the date in a date format, a description, and then a amount with either one or two columns where you can clearly see what the deposit transactions are versus the withdrawal transactions. And then what the CSV upload is for any accounts in Wave's chart of accounts that are under assets, cash and bank accounts, or money in transit accounts, or under the liability accounts for credit cards or loans aligned to credits. Versus if you're using in accounts that's under other assets or other liabilities, those aren't available for upload. So it kind of depends on how you set up your chart of accounts there.
Another question for you, Annika. This one comes from Natasha. Natasha says, every time I import transactions, it duplicates every single transaction. So what is the solution for this when this happens multiple times?
Uh, I might need a little bit more context there on
Yeah.
if the bank account connection is breaking and reconnecting it, or sometimes people will make errors of connecting the same bank account twice. But if a bank connection does break and you need to reconnect it, what you want to do is make sure that it is fully removed from the first time, then reconnect it to the same bookkeeping account for that checking or credit card account, and Wave will then recognize the last transaction in its system and import only from that date forward in order to avoid duplicates. So there might be a little bit of troubleshooting there. Otherwise, if it just consistently is doing it on a day-to-day basis, it might be something that the bank changed on their settings that Plaid just needs to get aligned with in order to bring it in properly.
Great. How should we track medical receipts? Thinking of sole prop here. So medical receipts should not, if they, unless they're an expense for your business, they should not be tracked in Wave. So you should track those separately. So you can either use an Excel spreadsheet, for example, or any other document you're comfortable with to keep track of those receipts. You also usually get a report from your, if you have a health insurance, right, a group health insurance, you usually get a report also from from the insurer where you have all the expenses you've submitted during the year. So you have at least those, and then you can add all the medical receipts that you haven't submitted to your insurance. Um, Another question for you, Annika, from Marif. Marif says, can I remit GST HST directly to the CRA from Wave?
No, Wave doesn't allow for making payments to vendors, including the CRA, from within Wave. But within your bookkeeping, you will see the withdrawal payment from your checking account. And there you would categorize it as sales tax payment to the government and then apply it to the correct tax. So if you have one tax, that makes it pretty easy. If you are keeping track of multiple sales tax, then you might need to split the transaction and apply it to each respective sales tax rate.
I'm not sure here. I totally understand the question from Matt, but maybe you'll have more insight on this, Annika. Matt says, in Wave's estimates, can Wave add a subtotal box after the discount before the HST?
I think I kind of know what's is happening here, and it's not just estimates, it might be invoices as well. But there
Okay.
is a discount box where you can either put in a dollar amount or a percentage. But then it also gets applied to the HST. So I will take that back to the product team to consider where the discount lives.
Mhm. I know there's a lot of questions and we're a bit running out of time here, but so we'll answer one last question. Um, it says here, is there a way to match Wave financial statement items to the T2 Giphy codes?
Great question. This is also in our pipeline of things that we're reviewing at Wave of ways to map chart of accounts to tax returns. Some people will do certain workarounds, which I don't
Mhm.
know that I want to promote workarounds, but they will sometimes put in the description on the chart of accounts of where it goes for their tax returns, just because most of the reason that they're doing bookkeeping is for that tax filing. So that might be one way to do it.
All right. Well, thank you, Annika. This was very insightful. Thank you, everyone, for participating, for attending today's webinar. As we've mentioned earlier, early next week, you'll receive an email that will include both all the details on the offer that we have for you, so both the Wave offer and the HR Block offer. And it will also include the link to the recording of today's webinar. So I'm going to wish you all a very good rest of your day, and thank you for attending.
Thank you, everyone. Take care.